Hello, listeners. Welcome to the Morning Market Update. The podcast is powered by AI. I am Joe.
And I'm Sarah. Today is February 26th, 2026. Let's dive in. We are starting with a heavy morning for the U.S. markets. It's been a classic case of price to perfection over the last 14 hours. The S&P 500 and the Nasdaq are both under pressure today, primarily dragged down by the semiconductor sector. Despite Nvidia reporting a massive beat on both earnings and revenue, with data center revenue up a staggering 75%, the stock actually sank about 5% in the aftermath. It seems Wall Street's expectations were so high that even a blowout report couldn't satisfy the whisper numbers. The S&P 500 is currently gripping a key support level. That's a price point where buying interest usually kicks in to prevent further declines. Meanwhile, the Dow Jones Industrial Average is also looking at a lower open. Interestingly, while the big institutional players are trimming tech, retail traders, your everyday investors, are rushing in to buy the dip in software stocks. They're betting that the fear over AI disrupting traditional software is overblown. On a brighter note for consumers, the 30-year mortgage rate has finally dipped below 6%, which could provide some much-needed oxygen to the housing sector even as the broader indices struggle.
Turning our attention north to the TSX in Canada, we're seeing a bit of a mixed bag, though the sentiment is largely shadowed by the volatility in the U.S. tech space. The TSX is heavily weighted toward financials and energy, and both are feeling the friction today. Energy stocks are navigating some choppy waters as oil prices react to a shifting geopolitical landscape. In terms of top movers, we're keeping a close eye on the materials sector. Copper has edged lower this morning as traders wait for a rebound in Chinese industrial demand following the Lunar New Year break. Since Canada is a major exporter of base metals, this lull is keeping a lid on the TSX mining heavyweights. We're also seeing some pressure on Canadian tech names that often track the Nasdaq's movements. However, the Canadian banking sector is showing some relative resilience as investors look for safe havens amidst the high-growth tech sell-off. It's a cautious morning in Toronto, with the index likely to trade sideways until we see more clarity on global trade policy.
Looking across the oceans, the mood is equally cautious. In Asia, the Nikkei 225 in Tokyo and the Hang Seng in Hong Kong both ebbed today. The Nvidia decline in the US really dulled the mood for Asian tech suppliers like TSMC and Advantest. Over in India, the Nifty 50 has been showing some strength recently, but even it isn't immune to the global risk-off sentiment we're seeing today. In Europe, the FTSE 100, DAX, and CAC 40 are all trading with a downward bias. Investors there are grappling with some disappointing corporate news, which we'll touch on in a moment. In the commodities space, it's not just copper that's stalling. Gold is holding steady as a hedge, but Bitcoin has been the real wildcard. We saw a brief, heart-stopping flash crash where Bitcoin dipped below $48,000 on one smaller exchange, though it has since stabilized. The Fear and Greed Index for crypto is currently leaning toward extreme fear, despite some analysts calling for a massive long-term surge. In currencies, the US dollar remains strong as uncertainty drives investors toward the greenback.
Let's get into the big corporate stories here in North America. Beyond the Nvidia drama, Salesforce is a major standout this morning. They posted an earnings beat and, more importantly, committed a massive $50 billion to stock buybacks. For those new to the term, a buyback is when a company buys its own shares to reduce the total count, which usually boosts the value of the remaining shares. Then we have Celsius Holdings. The energy drink maker saw its stock soar after doubling its sales from a year ago. It looks like their acquisition of Alani Nu is paying off faster than anyone expected. In the AI infrastructure space, CoreWeave is making waves. They've reported a staggering $67 billion revenue backlog, fueled by massive demand from Meta and OpenAI. Lastly, a quick nod to the crypto mining sector. Mara Holdings jumped 17% after announcing a deal with Starwood to build AI data centers. It's clear that the AI trade is evolving from just chips to the physical infrastructure that powers them.
Moving to international corporate news, the big story in Europe is Stellantis. The parent company of Jeep and Chrysler reported its first-ever annual loss. This is a massive blow, largely attributed to heavy write-downs in their electric vehicle division. It seems the EV winter is hitting the traditional European automakers particularly hard as they scale back their green ambitions. In the gaming and betting world, Flutter, the parent company of FanDuel, saw its shares drop after issuing 2026 revenue guidance that fell short of analyst projections. It seems the high cost of customer acquisition in the U.S. betting market is weighing on their bottom line. We're also seeing a stall in the Argentina stock rally. The Milei euphoria that drove stocks up following President Javier Milei's election is starting to fizzle out as weak corporate earnings hit the tape. Finally, in China, all eyes are on the upcoming high-stakes summit, as the country's leverage seems to be rising following some legal shifts in U.S. trade authority.
That brings us to the bigger picture, economics and geopolitics. The landscape changed significantly in the last few hours due to a U.S. Supreme Court ruling that has essentially upended the president's unilateral authority to impose tariffs. This has thrown existing trade deals into a state of confusion. The Department of Justice has a major deadline this Friday to decide how to handle tariff refund cases, which could see billions of dollars flowing back to corporations. On the central bank front, everyone is bracing for the next round of inflation data. While the 30-year mortgage rate dropping below 6% suggests the market expects the Fed to stay the course, any surprise in the inflation numbers could send yields back up. Meanwhile, China is watching these U.S. legal battles closely, as it may give them more breathing room in trade negotiations ahead of the April summit.
To wrap things up for our investors, first, the Nvidia effect is real. Even a great earnings report can lead to a sell-off if the market has already priced in the good news. Second, the EV sector is facing a moment of reckoning, as evidenced by Stellantis' historic loss. Third, watch the U.S. legal system. The Supreme Court's move on tariffs could have a bigger impact on your portfolio's multinational companies than any single earnings report this month. And finally, while institutional investors are cautious on tech, the retail by the dip mentality is keeping a floor under several software names.
That wraps up today's update. I hope you gained useful insights into these moving pieces.
Add your thoughts in the comments and follow for more such updates. This is Sarah.
And Joe, signing off.